The banking system.
The payment system within the U.S.
Yeah, it's pretty. I mean, when you say that, you got to be diligent about the credit card, debit card, checking account, safety in the system, KYC, BSA, Guardian. Yeah, it's pretty damn efficient because you all don't even think about it when you use it. Could it be now cross-border? Inefficient. Certain types of wires cross-border, so even consumer, but it's not remittances that someone's sending to their family in the Philippines or India, but you're sending it 25,000. Very inefficient. Some of the Fed wire systems are slow and inefficient. A lot of those are going to be fixed by real-time payments, which we already have. And believe it or not, the take-up isn't very high because people like what they're doing. They're not really complaining about what they're doing. So a lot of protection in that. But yes, you can always be more efficient. And I always give if you were JP Morgan, I always give a little talk about Sears, Kmart, Kodak, Digital Equipment, all these companies who didn't focus on getting better, faster, quicker, all the time, using technology, looking at customer complaints, knowing that there are people there. You should be doing that nonstop in any business you're in. And I know I know the Collisons quite well, and we do quite a bit with them actually. And so, yeah, anything can be made more efficient.
Well, not surprisingly, here at Stanford, AI is on top of mind. Do you see important innovations from your use of big data, machine learning, AI in the consumer-facing aspects of JP Morgan?
I see it in I think it is as real as the internet, electricity, the steam engine, the tractor. Yeah, it's big. Now, all those technologies, and you have to look at rollout at a pace different than you think, in a way different than you think, and they have consequences different than you think. And so we've been doing AI since 2012. We have 200 people in a research department, NLP, general intelligence. We have 2,000 people doing it. We have someone who reports to me and the president who does AI and machine learning, AI, all that, plus data. We mimic that in the credit card, trading, consumer, branches, all of that. In the operating centers, it's everywhere. So we have 450 use cases. We spend $2 billion. We probably save or make about $2 billion. The 450 use cases will go, my guess will be 800 by the end of this year. And they're very specific, risk, fraud, marketing, movement of money, scams, elder fraud. It hedges our equity portfolios today. It's used by traders. It's used by trading machines, I should say. There is nothing it's not going to touch. And call centers has already been used to anticipate why someone's calling in, and then to give the call center person the proper information, their fingertips to answer the question. It's going to be agentic soon, where it just sends you the debit card you lost, or it just makes decisions on behalf of the company. It already takes care of errors. The way I look at it is that big. Just do it. Don't spend that much time debating it. I don't need to hear open, closed, big, deep seek. It makes no difference. We're going to deploy the tool as it's going to change over time. The cost may be more than we thought. They may be less than we thought. Again, I'm not going to worry about it. We're just going to be the best at it. And I do think bad guys are going to use it. We know that. They're already using it on us, and mostly related to cyber, and cyber is already bad. So yeah, you have to do it. And it should be regulated properly. I hope it isn't over-regulated. It will affect every single job out there. Don't put your head in the sand. There are a lot of companies who don't want to talk about it openly because we're scaring people about jobs. It is going to replace jobs. So did the tractor and fertilizer. So if you want to create 40 million jobs, I can do that with 2 pieces of legislation. You can no longer use tractors in farms, and you can no longer use fertilizer. You're going to need 40 million people working 6 days a week, 12 hours a day, making $6 an hour. You create a lot of great jobs. So, jobs, not great jobs. So, but my view is, whatever it does, we have great humanity. So we have 100,000 people in ops. So if it affects that, and you say it's going to eliminate half those jobs in the next 5 years, well, attrition is 15%. The more I know about it, the better. The more I can plan for it, then let attrition be my friend, and where necessary, redeploy, retrain, et cetera. And so, yeah, I'm not afraid of it. We're going to use it, and there's not one job that won't be touched by it. Some just as enhancing your job. Some were doing agentic stuff. Some where it may eliminate a job or two, but.
Well, JP Morgan, because of your size and the data you get to see, obviously you have a big advantage in terms of using these and using machine learning and other types of tools. What's your view about regulations like open banking, which are being adopted by many countries, that would allow competition to have consumers to allow competitors to have access to their data?
You're already showing your bias in this one. First of all, I should have said this. we have 200,000 people using LLMs on our own data.
Yeah.
So if you ask how many companies can be downgraded, such and such in Argentina, it'll tell you. It'll just read 100,000 documents in a second, and 100,000 people use it every single week, and so it is unbelievable. And now we have huge data. So, and a lot of the world's data is private. It's not in the internet. Yep. So you got to keep that in mind. So we can run machine learning and AI against both our data and outside data. By law, we can't give away our data. Mm-hmm. You can study it. We allow it, like academics come and study it with, anonymously to see, cause and effect about a whole bunch of different things. But we can do both. And of course, some of these things are just starting, how you use it and how you, and I only want to use it to help my customer. I will not use it like social media. I want to give you menus, let you pick, let you tell me if you want ads, you want to see them about Scotland, you want to see about travel, you want to see about golf, as opposed to we just swarm you with stuff that is what you want. So we're going to use that data to offer what you want. Open banking, we have never been against open banking. I believe you own your data. And if you tell us to give your data to someone, I'm totally fine with that. What these guys want is access to your data. Okay, and all of it. So I want to give you the choice, say, I want to give them this data, but not that data. I want this, but not that. I want it to last for 6 weeks. But for example, some of these companies took your data, you signed up for, how many of you took Plaid? Raise your hands, be honest. How many of you do any of these outside parties that take money of your bank account? Just raise your hands. In a lot of those cases, you signed up years ago, they're still taking your data. They're taking all of your data, all of it, and they're selling it. Okay, I wouldn't do that to you. So we've got the high road in that. No, I'm being serious. I just don't like it. So we actually closed some of these guys down and said you can't do it. I want you to use your data, and you can move it's very easy to move your bank account by just write a check. But I want you to use it the way you want it. And the other thing is liability shift. They want to take your data. And if you make a payment that has a scam or something through some of these other things, they want you to look at JP Morgan when they gave the data to someone else and you were scammed. So we are okay. If you were scammed on that platform, they have to pay. You can't have a bank pay for your mismanagement of data. So just all these things are be very analytical, be very clear, be very fair, be very consumer friendly, and I would be in favor of it. But a lot of them, that's not what they want.
Let's broaden a little bit to the political perspective, come back to that. President Trump has spoken repeatedly about his desire for lower prices and lower interest rates. Unfortunately, these are not things you can do by executive order. Do you think things are on the right track to achieve that, or what are you concerned about?
I think he's right to be very pro-growth, and because growth is not good growth is not inflationary, it's good for the people, it's good for all different income classes. And I think he's right to be for deregulation, not getting rid of regulations, think of a lot of these a bureaucracy like you've never seen before. And you guys see it a little bit, you probably see it when you fill out your forms for Stanford, or something like that. It's unbelievable. And we've crippled our nation with it. And I mean through multiple things, and we should recognize that. Everyone wants low inflation. I mean, name a president ever who said, give me higher interest rates. It doesn't happen. And he can't control it. He can jawbone, but he can't control it. He may get the Fed to lower short-term rates, but he can't control 10-year rates. That's actually controlled by the world, the buyers and sellers of the world. And he could try to jawbone that, it will not work. That will actually, traders may move around to that, but that will actually be based upon supply and demand of US dollars, which includes long-term duration, foreign buyers, internal buyers, investment buyers, inflation expectations, the whole shebang. And tariffs themselves, depends how you use it. If they're small, they're modest, they're used as a tool or kind of a weapon to do, in some cases, good stuff. It's very modestly inflationary. I mean, you're talking about 0.1 or 0.2%. But you hear the press, inflationary tariffs. That's blown out of proportion. Now, if you put 25% tariffs on all imports, okay, that's a lot more. That could be, in my view, quite recessionary and inflationary.
On the point on interest rates, you brought up the 10-year. We have Treasury debt held by the public approaching $30 trillion. It's forecast to grow to over $50 trillion in the next decade. Is that an issue that you see? I mean, are you confident investors can absorb that volume of treasuries without much higher interest rates?
I think it's a problem staring us in the face, and we're heading towards that cliff. I just don't know where that cliff is, a month away or 10 years away. And if you look at our projected deficits, they're so big. The $2 trillion, the 7% of GDP is the largest peacetime ever. The 100% of GDP total debt is the largest other than a war. The world is doing this too, but it wasn't just us. And remember, all that spending also fueled inflation and growth. And what else did it fuel? Corporate profits. And you don't hear people talk about that much, so we can't do it forever. I don't know where in that curve when it's going to go straight line to like 115, 120% in 10 years, and then it's a hockey stick, mostly from demographics and Medicare and Medicaid. Unfortunately, I think we're not going to deal with it until it gets bad. And that's a terrible way to deal with the problem. It's better if we deal with it today. So maybe they will. I mean, a lot of people talk about it, but neither, in my view, I don't see either Democrats or Republicans saying, we have to handle this. It's mostly, people want to tax less and spend more, generally.
Are you and other primary
And I think inflation may not go away. That's the other thing about, I always say when you look at the world, that spending is inflationary. Okay, certain types of spending are less inflation than other types. Like if you were investing in infrastructure, that may be long-term, not inflationary. But we didn't. We gave the people $10 trillion and they spent it. And we're continuing to do that. And so, but look at the future stuff we have to do. The remilitarization of the world, that's inflationary. The restructuring of trade, at a minimum, is going to be inflationary. It really has, some's happened, but some hasn't. The green economy, we've wasted a tremendous amount of money. It's inflationary. The infrastructure stuff that needs to be done, it's inflationary. Deficits, I don't see the disinflationary stuff taking place. So that may be the thing that people get surprised about. That just doesn't go away. In fact, it ticks up, and people are expecting all soft landing. It may not happen. We're in a soft landing, but it may not continue forever.
On that point, we have a lot of policy uncertainty right now with the new administration, with many things still up in the air. We would generally view that kind of uncertainty as likely to slow investment and cause, many to sort of step back and wait and see. Are you seeing signs of that from your perspective, the Business Roundtable, your corporate customers, and so forth?
The last stuff that came out, the CEOs and Business Roundtables, that CEO confidence is up. Consumer confidence is going down. If that doesn't happen that often, I would submit the one I believe more is the consumer one.